Hi, this is Ed. Today we're going to go over the income statement. This will be the income statement 101, just the basics of an income statement. I'm going to do that in a demo company in Xero. We use Xero, we use QuickBooks, and we use Zoho Books for our bookkeeping clients. We can do your books in any of those software. And if you don't have software, we'll take a look at your business, what needs you have, and determine which of these would be the best for you. This one I'm using is a demo company in Xero, and this is the basic edition, which is just $15 a month. So if you're doing it in a spreadsheet currently, there's no reason to do that. But let's take a look at the income statement. This is going to be just the basics. So your income statement is going to be organized in a couple different ways. Now this is, but let's start with this. An income statement is for a period of time, a range of time. So I've set this up to be the first quarter of this year. So that's what we're going to look at. Actually, maybe we should do month and see how that works. Let's see, last month. It might be a little better. So let's try that and see how it looks. So the income statement is for a range of time. It could be a month, which is the usual. It could be a quarter. It could be a year. And you can adjust that, obviously, using the software. That's one of the beauties of having software. So let's take a look at this month in this demo company. So they had income of $8,114. Let's get rid of the cents. We'll go here, get rid of that. Let's take away that for just a moment. Okay, so now it's, we can see it, $8,114. They didn't have any cost of goods sold here. So we'll get an example that you can see that. So, but the organization would be your income, your expenses, and then your net income or loss, as this case is. So let's look at a better one. Well, before I move off of that, let's take a look at, we can do a comparison, which is really great. So let's look at the last 2 months comparison and see how that compares. That's another nice thing. So you can look and see, okay, go back a couple months, February, March. So you can see March had more income than April. And then, here's the cost of goods sold only in March. So you can see there was more sales in March, more income, but lower gross profit because there was a cost of goods sold of some sort. And then your operating expenses, and then comes down to your net income down here. So the way this would be structured with the cost of goods sold would be costs that are directly attributable to your sales. Maybe if you're a manufacturer, it might be the material. It could be the direct labor. If you're a services business, then you can directly attribute labor to a specific sale or a product, then it would be in cost of goods sold. And then here down in operating expenses, you'll find these are general administrative costs, and they're typically both fixed and variable. So for instance, advertising would be variable, automobile expense may be variable. And the nice thing is you can look at this and see, okay, it was back in February 149, but 560. So we had more automobile expense. And there's another neat thing we can do here. I'll show you in a moment. And then, for instance, rent, that's a fixed cost. Utilities are pretty much a fixed cost. Janitorial expenses are relatively fixed cost, although interestingly in this demo, it only has it in the 1 month. Let's look at rent, see rent's consistent. So how these are segregated will depend on how you set up your chart of account. So that's why the chart of account is very important, to set it up so that it separates the income and expenses in a way that helps you analyze your business. So it has to be well thought out in advance. And then, so it could break down your sales and so on. Now, something else we can do is, let's add one more feature here, which is a great option again in using software. We're going to put a percentage of income. So, the dollar amounts may vary. If your income goes up, many of your expenses will go up. But if you put it in as a percentage of income, it gives you a more accurate picture of how those changes. So obviously income is 100% because that's what we're basing our percentages on. So we have it here for a column of percentage of income for each of the 3 months. So you can see no cost of goods, but cost of goods sold here in March. So it was 17%. We come down here, see our gross profit 100%, 83%, and 100%. Okay. Then coming down here, we see advertising. Wow, 89%. There's zero advertising back in February, and March it was 89%. Maybe that's why we had, we didn't have a jump in income, and 31% in the current or last month. And so this is very useful to see 3%, 0, 7% for automobile expenses. Let's go down and look at the fixed, some of the fixed costs like rent. So you can see in February it was 20% of your income. In March it was 13%, and then it jumped from a little bit up to 15% in April. And many industries have standard expense ranges that is kind of common for the industry. So particularly in the range of things like labor and other expenses that you can get a good idea. And of course, we have a pretty good idea too. So we'll notice if there's changes in these trends or if they're way out of line in some area or another. The other nice thing is your bookkeeper, when they're reconciling and preparing your period end statements, they will look at these trends. Let's remove this so it's a little easier to see. So they'll look at trends. This doesn't give you a great example, but they'll see a big change here in advertising. So they can go in and click on this, open it up, and see, okay, this is what we spent on advertising. Sometimes things might be miscategorized, and this is a good place to catch it. If you see a big change month to month, you can just click on it, take a look at those individual expenses, and even dig deeper if you want to, if you need to. Or we can send you a message and say, hey, is this really categorized correctly? Or is this the amount you spent? Or is this a prepayment for something so that we should not attribute it to this month? Of course, it depends on if we're using cash or accrual. That will vary. That's not appropriate for this video. But so that's the type of things that we'll do is take a look at your trends, look at your percentages, make sure your chart of accounts is set up properly, communicate with you and say, okay, is this, particularly if you're first getting started with accounting software, is this set up so it's giving you the information that you need to make good decisions about your business, both for current expenses and the trends and the percentages. So I think that gives a general idea of how this works. This could be set up this quarter. Of course, this isn't a complete quarter. Let's take the last quarter, and then we'll compare it to 2 quarters previous. Yeah, it's not have a lot of data in here, but that's another way of looking at it. So we can compare quarter to quarter, year to year, this quarter to the same quarter the previous year to measure growth. Lots of different things can be done and looked at and analyzed using the software. So that covers that. If you have any questions, just leave them in the comments. I'll be happy to get back to you to answer those. But this is wrapping up the Income Statement 101.